It appears that the damage is really held toward, when you're looking at the stocks of this, to J&J. Again, J&J is not down that much, but as we look at shares of Moderna, BioNTech, Novavax, Pfizer, of course, they are all popping at this hour, specifically Novavax up more than 8%. But what does this all mean? You know, are there other areas where you can pounce in and start scooping up shares that are either vaccines or vaccine related? To our floor show traders, Chris Meyer of Ocean First Financial and Tom Hayes of Great Hill Capital. Chris, J&J is 1.3% cheaper. Now's the time to buy. What do you think?
Well, I think absolutely. When you think about the magnitude of what's happening here, we have 6 cases out of over 6 million doses. You want to be very careful about that. You want to make sure that if there are important protocols to put in place to understand maybe people that may be at more risk than others, you want to do that. But it's not going to affect the overall efficacy. And in the long run, COVID's going to be with us for a while, not just with vaccines, but also therapeutics. So I think it's a steal.
You think it's a steal here. Let me get to Tom. There's a massive biosphere of companies that are related to the making and distribution of vaccines. Where would you put your money right now, even as we see the S&P 500 is jumping to an all-time high?
Hi, Liz. Well, with the market up 85% off of last year lows, it's getting harder and harder to find value. And big pharma is one of those spots that's still undervalued. So I'm going to give you 3 names. Now that the 10-year yield is stabilized in the short term, people are going to want dividend income, and they're going to want a defensive group in case we get some short-term chop. You know, sentiment is very high here. So we do love J&J. It was a 1 in a million event. They'll find the right contraindications and protocols moving forward. But here are the numbers. It's trading at 15 times next year's earnings. Its average historic multiple is 18 times earnings. You got a 2.5% dividend yield. And by the way, they've raised that dividend, Liz, every year for almost 60 years. So that's a pretty exciting yield play. And pharma is only 50% of their business. Medical devices is a third. And consumer products, think baby oil and Band-Aids, that's 20%. We also like Pfizer, which is up 10% since we talked about it last month. We think that has room to run, trading at 12 times earnings versus its historic average of 14 times. And the yield on this one is 4.2 times, which is about 2.5%, the 10-year yield. So we like that as well.
Right, so you don't want to throw the baby out with the bathwater. And Chris, I got to get your thought, though, on Coinbase tomorrow. Is that something you would also buy shares in as we await this massive IPO of a cryptocurrency exchange, first one ever?
You know, I think it's very hard to understand exactly what's going to drive the price of that. You've got kind of the fundamental economics are hard to understand. So it's going to be only for those that have a significant risk tolerance. You know, certainly non-fungible tokens are here to stay. It's going to be a big market. I think they're going to have a big role, but the exact valuation is going to be difficult to determine. So if you're getting in, you just need to have the stomach for it and be prepared for a ride.
Well, you know, they had first quarter profit of about 730 to 800 million. They've got a lot of active users, so I think it's important just to balance that. But again, I get it. It's a little confusing, but boy, are we seeing some real action, which leads me, gentlemen, thank you so much for joining us, to what's going on next.